Joining. We can see that plenty of you are on the call already. We'll probably just wait a couple of minutes more just for the last couple of people to join on, and then we'll get going with discussing our analysis and take on the market disruptions that are on the horizon for the European low carbon residential heating market.
And in terms of how the format will work today, we've obviously got some slides to take you through. We'll be sending out the slides by email after the event, so you'll all get a copy of the slides. And we encourage you to ask questions throughout in the question box on the right-hand side of your screen, and we'll address some of these at the end. If you run out of time, obviously with the question and answer session, we'll always try and get back to you with questions. So please do interrupt using the online chat function or the question box. Delighted to hear your thoughts and views as we go through, and we'll come to those at the end. So there's a few of you still joining, it looks like. Great turnout, so welcome everyone who's just joined. We're just going to kick off in a few moments.
So, good morning everyone, and welcome to Delta Energy and Environment's Roadmap Service webinar. Today we'll be discussing market disruptions in the European residential heating markets and how innovations and incentives might shape these markets. We are delighted to have so many of you joining us this morning. It looks like we might even reach a record for Deltaee. So this webinar follows on from our Connected Home session before Christmas that looked at the annual state of the energy market, focusing on successful propositions in Europe. Leading the webinar today is myself, Jenny, an analyst on Deltae's Roadmap research team, and I've got my colleagues Pip and Jennifer with me.
Good morning. So I'm Jennifer Aaron, I'm a senior analyst at Deltaee, and I focus on the Roadmap research area and also our Heat Insight service, directing both those services.
Good morning, I'm Pip. I'm a senior analyst at Deltaee. I'm also the research manager of the Roadmap research and the Pathways tool research. Welcome to everyone.
So some of you know us already pretty well, but before we get started, we just thought we'd take a minute to introduce Deltaee for those of you who haven't heard of us. Delta Energy and Environment is a research and consultancy company that specializes in distributed heat and energy. We help our clients to navigate the transformation that the energy system is currently undergoing as it becomes more customer-centric and service-orientated. We cover a wide range of distributed heat technologies and markets, specifically focusing on the customer side of the meter. We provide market insight and commercial strategy advice for our clients through our hybrid business model, which comprises of 9 research services, the Roadmap being one of these, as well as bespoke consultancy advice. We have a range of clients, including energy companies, manufacturers, policymakers, and the finance sector, all across Europe.
So in terms of what we do, we deliver our research in a number of different ways, primarily through a range of research services covering the key areas that you see listed there on the left-hand side of your screen. And we also do bespoke consultancy, one-off pieces of work for our clients around a specific topic, and summits, which are usually invitation-only events where we get our subscribers to deep dive into the key issues around their technology. What you'll hear today will come largely from our heat area, which is the bread and butter, the core of our business, but we're also touching on examples from the energy storage service, from our energy services innovation research, just to highlight how everything is interlinked and how we utilize the research across the range of our services in everything that we do.
So today we're going to start by giving a brief introduction to what we consider market disruptions to be and why we're in this space, followed by a quick poll to see what you guys think will be the biggest impact to the low carbon residential heating market. And then for the majority of the webinar, we will be sharing with you some of our latest research and findings, the potential market disruptions in the UK, German and Italian residential heating markets. This will include market insight as well as quantification of potential disruptions. We will then bring this together with a short summary, followed by a Q&A session at the end to answer any of your questions. So please feel free to submit the questions on the webinar software that you should be able to see on your screens, and we'll make sure that we come back to them at the end, and if not, we'll get back to you afterwards.
Okay, so before we dive in, let's first define what we mean by market disruptions. There are many possible interpretations of a market disruption, but ours is simply anything that will have an impact on the market against its current trajectory. When most people think of market disruptions, they tend to only think of innovations in technology, so new products, smaller products, cheaper products, technology breakthroughs, for example. And also, most people think of regulations, so maybe a financial incentive, maybe regulatory policies, changes in taxes, etc. However, for us, the term market disruption is really quite vast. Of course, we keep a finger on the pulse in terms of technology innovations, for example, in energy storage, connectivity of products and demand response, and also with the more traditional disruptions such as change in financial incentives, fluctuations in energy prices and government commitment to a low carbon future. However, we also routinely look into the more dynamic market disruptions such as new business models. So this includes, new entrants that maybe aren't from traditional energy services backgrounds. It may be the value of flexibility. It could be disrupting market value chains and business models, of course. And these could really shake up the market by doing something brand new or simply really just exploiting value in a different way using existing market structures. We also analyse the changing motivations and attitude of consumers, especially as the Internet of Things takes off and empowers customers through data. For this webinar, we will concentrate on how new business models, innovation in technology, and change in incentives will impact the German, UK, and Italian markets.
So just before we get going with our research, we thought that we would ask you guys what you think the biggest impact on the low carbon heating market will be. So you should just see now a poll pop up on your screens. If you could please select the option, one of the 4 different options that you see here, and consider which one you think will have the biggest impact on the low carbon residential heating market in Europe. Oh, we can already see the results coming in. We do look to have a clear winner.
Only 69% of you have voted.
Oh, that's now up to 78, 79. So if the last couple of you could place your votes and select the option that you think will have the biggest impact on the heating market, then we can then close the vote and share the results with you.
Okay, with only 90% of you voted, it looks like there's a definite winner here. I think around 50% of you are voting for policy and regulation. The second highest being new business models, and then equal third place is shifting consumer attitudes and technology innovation, and that's with 90% of you voted, and that's still not changed. If the last 10% want to vote, I don't think you can really change that now, but so we'll just end that now.
So here we go. The results should show up in your screen, but if not, you can note that policy and regulation was by far the overall clear winner with 49%. There you go. And the last 2 coming in at third place with the shifting customer attitudes and technology innovation. So thank you very much. And now I'll pass to Jennifer.
Thanks. So before we dive into the disruptions that we see really shaking up the markets and compare them to your own thoughts there, I just wanted to give you a brief introduction to the methodology in how we approach our work and why we think that market disruptions are the key topic to be talking about. Essentially, we from the research we've been carrying out can see that there are a lot of different types of disruptions on the way in European heating markets, and it's important to point out that these are happening here and now. The start of the journey is now, and we're seeing a lot of things changing around us. And we think it's critical to identify, analyse and quantify the impacts of these disruptions so that our clients can make the right strategies going forward for their products and for their customers. The broad range of services we have enables us to do this through kind of a unique approach. We have a continued global scan of all the energy markets, so we can identify the key innovations that have the potential for disruption. We have deep and detailed insight on technology through our technical research services. We carry out specific research on the customer side of the meter, meaning we understand what customers want, what motivates the choices they make, and how this is likely to change going forward. And this applies to both residential customers and installers in some of our key markets. Lastly, our roadmap service brings all these elements together to quantify the impact these potential market disruptions might have, using our own proprietary data tool, the Pathways tool, to build scenarios that can take in both the techno-economic inputs and outputs that we need, but also soft factors like customer appeal. So moving on, the first area we're going to look at is the UK, and it won't surprise many of you that one of the disruptions we're going to focus on is the potential of the RHI. So the RHI is something we've been tracking in the UK for a number of years. The scheme was officially launched in 2014 and was much anticipated by industry. Since then, however, there's been some disappointment at the impact it has had immediately on sales. But you can see from our reference forecast for 2025 that lower carbon heat does take a reasonable share of the heating market by 2025 and actually takes 19% of all heating sales. What is less certain is how much of this is due to the RHI. In reality, much of this is actually made up of the new build regulated sector. And this limited impact is highlighted when we test a higher RHI scenario. So even where we have assumed the tariff increases and remains consistent all the way out to 2025, which is certainly a stretch given current government plans, we see only a small shift in increase in low carbon heat uptake. So I guess the question for the UK is, how can we make the RHI more successful, and why is it having such a limited impact? And there's three key things that we see in the market that are limiting the impact of the RHI. The first is that customer awareness and appeal is consistently low. The scheme is complex and harder for customers to get their head around. There's not been a huge amount of marketing, and our latest RHI tracker survey carried out under the Heat Insight Service showed 75% of respondents had not even heard of the scheme. Appeal is more promising, so when you sit down with a customer and you explain what the RHI is, around half would consider using it. But with dropout rates high and a long customer journey, it's not an easy sale to convert. Second, industry push, linked to the above. There has not been a huge amount of marketing, and from an installer supply chain perspective, low carbon heat is a more difficult and complex sale than a boiler. There's a lot of paperwork, long customer journey, and the perception that the incentive is not fully secure as it keeps getting revisited on a regular basis and changing. So installers just aren't diving into it in the way that we thought that they might in terms of getting trained. So there potentially is a supply chain issue. Lastly, and perhaps most critically for the incentive, it doesn't address the upfront cost barrier. So unlike in some markets like Germany, where customers are less price sensitive, UK customers have been telling us consistently over the last 5 years that upfront costs are the primary reason why they would not invest in low carbon heat. In the UK, not much value is typically placed on heat, and customers are not used to paying a large amount of money for their heating systems. Excuse me. Typical boiler installs in a small thermal demand property can be as low as £1,000 to £2,000, while in contrast a heat pump install can cost 4 or 5 times that. And a majority in our surveys are not willing to pay more than £5,000 for their heating system, which is a way off some of the prices or the target prices of some of the products that we're seeing. So, not overly successful in its first year, a lot of barriers for it to overcome. But can the RHI still be that disruption in the UK market? We believe it can. We believe all is not lost, but it will take some innovative thinking from players in the market to really boost its appeal. So one of the things that we found in our most recent research is that customers are very open to sorts of innovative business models that we're starting to see emerge in European heating markets. Over a quarter said they'd be willing to use a financing package to pay for their heating system, so they're not kind of stuck on paying up front. And potentially interesting, 66% of respondents when asked said they'd like a product for free offering as their preferred option, so some sort of heat leasing arrangement. And we're already seeing some of these business models emerge using the feed-in tariff in the UK around micro CHP. So for example, Flow has repackaged its micro CHP offering as an energy supply offering, so they can offer you a lease of the appliance and they can bundle it with a maintenance contract and a supply contract to minimise or completely eradicate the upfront cost barrier. iPower, another Scottish social enterprise company, has a model for providing fuel cells for free. So their costs are covered 100% by taking the feed-in tariff payments over the 10 years, and the customer gets the system for free and only needs to pay for the gas going in. At the moment, these are early stages in the UK market, so Flow are planning to start installing their systems from March and are now taking orders, so it's early days. And iPower is sold in the low tens of units. But it shows promise, and it shows how innovative thinkers are starting to try and jump onto a secure incentive to make their business model work. So in the UK, a key question around the RHI is, could the RHI be levered to make a sort of heat contracting agreement work for heat pumps, which is a key technology that's been targeted by the scheme. We're already seeing heat leasing for heat pumps in other countries. So for example, in Denmark, there's a company offering a heat pump for free, plus a monitoring system in return for just an annual fee, and then payments for the heat that the customer consumes. And we've modelled this model in the UK to see what it would look like. And what we found is, yes, it is hard to replicate at current energy prices. But energy prices are extremely low at the moment, and if oil prices return to a more normal level, paybacks of around 10 years could be achieved for the supplier. So this wouldn't completely rule it out. It's not super attractive, but it also does not take into account any benefits from the assignment of rights potential of the RHI. So if that could be packaged in with this, it could become much more attractive for a supplier. And for the customer, the system is free from the outset, so they're better off from the beginning. Overall, summing up the UK market, I think it's going to be a tough number of years, but we still have an RHI committed to 2020, and it might be tricky, but we're already seeing exciting business models begin to emerge, and there's lots of potential for these business models to create further disruption and actually lever the incentive to maximise its benefit for the market.
Okay, thanks Jennifer for the summary of the UK market. I'm now going to talk about the potential market disruptions in Germany, and again I'll focus just on a business model and a new financial incentive to give you an overview. So in our Germany roadmap service, we recently ran a number of scenarios that I've just highlighted here for you, and this included quantifying the impact of business model innovations, changes to incentives, as well as recovering energy prices. It's quite evident from this chart that the greatest market impact was really found for innovative business models, which we'll look at now. And I'm just going to concentrate on the Freeheat one, as we've already just touched on the product for free. So Freeheat is a new business model. It was initially identified by our Energy Services Innovation Research Service. In Germany, this is offered by Cloud and Heat. And our ESI service really looks over global innovations. They identified 100, and they've subsequently carried out detailed analysis on the top 36 of these that are already starting to disrupt the heat and energy retail markets today. So let's go straight into what we found. So what do we mean by Freeheat, and how do customers get it? So Cloud and Heat and others such as Nerdlies in the Netherlands heat homes for free with computer servers. They distribute computer servers, which are usually housed in data centres, to homeowners in a system which replaces their boiler. And homeowners can use the heat byproduct from the servers for free, so kind of a win-win. This business model means that after an initial cost of 5 to 15,000 euros, depending on the size of the system, and that's the heating system, which encases all the servers, the homeowner pays absolutely nothing for heat or maintenance. So that's all included in that upfront cost. Whereas, the UK market is quite sensitive to upfront costs, homeowners in Germany actually do pay a little bit more. And if they can get free heat for a lifetime, then who wouldn't pay a little bit more to get that heating system to start with? So how do Cloud and Heat make a business from this, though? Well, simply they charge businesses that wish to use their servers rather than servers they currently use maybe in a data centre. So it's shifting attitudes also from businesses to use distributed servers. And currently we can see that customers really like this proposition actually. The main challenge for the companies is getting the businesses to switch their server providers to a more distributed type. So market uptake is low in today's market, but we can see good potential. And we have obviously tried to quantify this using our pathways model and our roadmap service. And we've done a low and a high uptake scenario for this innovation. So to do that, we've just flexed our customer soft factors, which includes customer appeal and customer awareness, to reflect a low and high pull from customers for this sort of business model. So for the low scenario, we modelled a delay in industry push. So maybe the marketing campaign's not that strong. And we've fixed the model so that customer awareness and appeal take longer to increase and don't peak. So what we're saying here is actually, people are interested initially, it's something quite new, but it's going to remain a relatively niche market. It'll only have, a maximum peak that will remain steady afterwards. However, for the high scenario, we modelled a big marketing push from 2016 and a corresponding increase in consumer awareness and appeal. So this assumes that companies such as Cloud and Heat, take big marketing campaigns and customers find this proposition very appealing and the business model takes off. So you can see here, we get a range of between 50 to 200,000 heating system replacements in 2025, which is a considerable size. And worth noting actually is that the majority of these are displacing gas boilers in Germany. So you can see that it's quite a huge disruption. If this really does take off, that's a big threat to gas boilers in Germany. The other interesting thing about this business model is that it's not relying on any sort of financial incentive. So Jennifer mentioned the product for free in the UK, it relies on the feed-in tariff. So it really is kind of one of a kind. But let's also look at something slightly different. So in Germany, there are other business models that do rely on financial incentives, and there's a brand new financial incentive for fuel cell micro CHPs. And so this is definitely worth a look at, because if this comes out with a business model, for example, a product for free, then it could really take off. So I guess I'll start by just briefly updating you guys on what the fuel cell subsidy even is. So the German government have released 450 million euros for fuel cell micro CHP in residential homes. And this is over 8 years. So it can support around 200,000 fuel cell units. And the interesting thing about this is it provides a support in the form of an upfront subsidy of around maybe 8,000 euros. So it's quite a sizable chunk off the upfront cost. So you can see our analysis here. The purple is our reference scenario. That assumes that actually the budget doesn't quite all get spent and the industry push doesn't happen quick enough for that to happen. But what was really interesting is to work out, okay, what would happen if the whole budget got spent by 2025? And that's the blue line here. So from our analysis, it's key that industry must help the subsidy to reach its full potential. And how that will happen? Well, we expect that obviously today, after the downturn of the gas engine micro CHP sales in Germany, the fuel cell CHP market is likely to get off to a bit of a slow start. However, this is the time now where industry marketing and push really needs to happen to help increase customer awareness and appeal for the fuel cell technologies, which will lead to this strong uptake here in 2020. With this continued push from industry and marketing and raising of awareness, to bring customers on board, we can expect product cost to come down more quickly and customer awareness and appeal for these technologies to continue to increase, so that in 2025 we end up with around just shy of 60,000 sales of fuel cell micro CHPs. So significant market share, and customers really getting to grips with the technology, product costs continuing to go down, and then we'll see where the subsidy goes after that. So just to summarise, it's clear to see that there's lots of different business models happening in Germany at the moment. There's many different incentives, and as I mentioned previously, customers in Germany will pay slightly higher prices compared to that of the UK and the Netherlands, for example. So that's where these business models for higher priced products will really thrive. That brings me to the end of the Germany market, and now I'll pass over to Jenny for Italy.
Thank you very much, Pip. So again, similarly, in Italy, we have modelled a variety of different scenarios, the financial incentives and different technology offerings. And what we found is that maintaining government support of fiscal incentives, the blue line depicted here, has by far the biggest impact by 2025. So the fiscal incentives that we modelled here was the Italian tax credit scheme, which currently provides customers with a rebate of 65% of the fully installed cost of their low carbon heating system, which is paid out over a period of about 10 years. This was due to be reduced to 50% this year and 36% next year. We, however, modelled how the market would respond if the level of support of the scheme provided were to be maintained. And as it happens, in fact, just last week, the Italian government announced that they will do exactly this, maintain the level of support to 65%. So it looks like this trajectory really could become a reality. The tax credit scheme has been well received in Italy due to the fact that it is simple to understand and easy to apply for, unlike the RHI, for example, that Jennifer mentioned earlier in regards to the UK market. Maintaining support creates a huge retrofit opportunity. Yet annual sales could be even higher than those presented here if customers and installers are energised into action and decarbonising heating takes a more prominent role in political discussions in Italy, much like the big debate that's currently happening in the Netherlands, for example. Hybrid heat pumps are likely to reap the most benefits with this approach for maintaining fiscal incentives. And in fact, they're likely to take up to a quarter of the market share of the low carbon heating market by 2025. And the gas boiler market will be particularly hard hit, with annual sales dropping to approximately 10%, dropping by approximately 10% by 2025. Government commitment to residential low carbon heating in Italy looks set to be an exciting space to watch, with this fiscal incentive, the Conto Termica scheme, and also the experimental heat tariff all changing just last week. So now let's have a look at some technical products that will shape them, that could potentially capture market share in Italy. Today I'll focus on the hybrid box, which has been developed by Riello and Beretta, and Rober's gas heat pump, which we believe will be introduced to the market officially at the Mostra conference next year. Later this year. Strong targeted innovation has meant that this hybrid box heat pump has been designed so that it can fit into the walls of properties and also on their balconies, which is a hugely beneficial characteristic, particularly in Italy, as properties tend to be quite small. And so this product could be installed in many more across the whole country. The system also has low upfront costs compared to other low carbon heating systems. On the other hand, gas heat pumps are a great development for on-gas customers, giving an alternative to electric-driven heat pumps for these gas customers, because it means that they would significantly reduce the amount of renovation, investment and hassle that's needed to install. It also provides low running costs and advantage over gas boilers. Both these products have been designed to target the retrofit sector, with gas heat pumps better suited to larger homes, whereas hybrids are suited to average thermal demand, as well as the new build sector. We expect that hybrids will have an earlier market impact, gaining traction up to 2020 with a 26% compound annual growth rate, whereas gas heat pumps, we think, will take off post-2020 due to their later market entry, but will in fact gain market traction even to the extent that they could potentially double the growth rate of the hybrids. So there is a lot of focus on low carbon products and making them lower cost and smaller to improve their physical fit. Just last week, Eneco, an innovative Dutch company that we work very closely with, launched their new Heat Winter, a small and very low cost hybrid heat pump. But it's not only heat pumps that are seeing more and more innovation. Heat storage is also undergoing development with, for example, Sunamp's heat battery, a phase change material that provides heat storage with the advantage of being much smaller than hot water cylinders. The first commercialized product, Sunamp PV, stores excess power from solar PV systems as heat, which is then later used to provide instant domestic hot water. Through our energy storage service, which we are keeping on top of developments in this space, and looking into insight on how energy storage will be deployed, the most promising applications and business model innovations. These are just a few examples of other technologies and innovations in these areas that we will be analysing on the roadmap service later this year.
So thanks, Jenny, for that insight into Italy. We're reaching our time now, so I'm just going to quickly summarise some of the key points from today. So today we've highlighted a variety of market disruptions which have been identified through several of our services here at Deltaee. We brought this insight together and quantified the potential disruptions in our roadmap service using our own proprietary pathways tool. We've mainly focused on just 3 markets, and at the beginning, if you remember, I highlighted 4 types of market disruptions broadly. But there are many more types of disruptions, and indeed markets, that we obviously know about and are very close to. And we're happy to discuss this with anyone if they want more insight on any of these issues. An important point to take away from this webinar is that disruptions are happening now in today's market. It's not something to look at in 10 years' time, 5 years' time, 20 years' time. The disruptions we're talking about are in the market today and can have a big impact. And what with the digital and Internet of Things sort of era and shifting consumer attitudes, disruptive markets can probably happen at a much quicker rate as well than traditional maybe incentives could. It's likely that the game-changing innovations to the residential heating market will be new business models and lower cost products. Some of these business models may depend on a financial incentive. For example, the product for free type micro CHP offerings we see in the UK and Germany, where a feed-in tariff is essential. However, their success only comes with significant industry push and new business models to take advantage of these incentives. The incentive on its own won't happen, and it won't really disrupt the market. And that's, as we've seen really with the RHI in the UK. So there's a range of ways that we can help you navigate your way through the distributed energy market transformation. As we've shown you today, we're working with and close to many of these innovators, and we're really under the skin of all of these markets, carrying out qualitative and quantitative analysis into the disruption of their impacts. So we hope you've enjoyed the webinar today, and we're happy to continue for the next 5 to 10 minutes and take some questions. So if you haven't already, please send through your questions now, and we'll just quickly have a look to see if there are any questions so far.
Well, I guess the last thing as well, just in terms of linking it back to the poll we had right at the beginning, I think on the whole we can agree with many of the industry views that policy incentives are going to be critical, but in terms of how policy incentives are impacting markets and how sensitive markets are, what we're actually finding is that it takes a disruptive business model to really lever them and to make them work and to be stronger. So it's quite an interesting feature of the market that actually innovation is required to make the most of the incentives, and the impact on their own is not enough to really grow the market in many cases.
So let's have a look. I'm just running through. So thanks all of you for sending. There's a lot of questions through this morning. We'll just.
So one here from someone asking about what we consider to be. So we talked a lot about lower carbon technologies, and I guess we haven't actually said what we consider to be lower carbon when we're making those assumptions. So when we talk about lower carbon heating, we talk about things like heat pumps, so air source, ground source heat pumps, air-to-air heat pumps for heating, but also micro CHP would be under that category, hybrid systems would be under that category, and we have a number of different hybrids that we model in our pathways tool. So yeah, and also biomass, of course, is in there as well. An interesting one there on the RHI, whether or not the analysis is a little bit premature. I would say that we have ongoing analysis on the RHI and its potential impact, so we're constantly looking at it and revisiting it. The scenario we modelled actually for our high scenario was a tricky one in terms of trying to pick the right one. No one really knows where it's going to go, and actually the current plans for the consultation are to potentially increase the rates beyond what we increased it to in that scenario. So obviously when and if that happens, we will increase the scenario, the tariff in our scenario, and present a new view. Certainly we see that a higher RHI could only improve the impact, and we're quite interested to see what the outcome of the consultation will be as it goes forward.
There's also another question here with regards to biomass and wood pellets in Italy. So our analysis has really, to sum up, shown that we think the biomass sector will remain relatively niche in Italy out to 2025. And with regards to whether it's strongly supported by the government, interestingly, when we were having a look at our latest report, in-depth report that we do on the country, we we were having a look at the different changes in VAT and the cost of the fuel. And that has substantially changed, and it changed from about 5% of the tax went up to 20%. So that was just in the space of 1 year. So the impact of that suggests that it's likely that actually the government support with regards to biomass is possibly not as strong as we have seen for the electricity side with regards to hybrids, for example.
Brilliant, thanks. We've got a few more questions about Italy for Jenny. So there's one about the tax credit scheme. So which technologies can it be applied to? And we've also got another one on comparing that to other incentives in Italy. Someone mentions the quanto termico. Which ones are more successful? Can you maybe just comment on that?
Yeah, absolutely. So the Italian tax credit scheme itself and which technologies it's applied for, it applies to, is actually very broad. So yes, we've spoken about the hybrid today, but it's also applicable to a wide range of different technologies. I'd have to double check precisely, but it definitely has biomass in it. I think it extends to gas heat pumps as well. And possibly even the condensing gas boiler, but yes, the range is broad. And with regards to how the Italian tax credit scheme has sort of fared in comparison to other schemes that are in Italy, so the Conto Termico that I mentioned, interestingly, if we take hybrids as an example, the Conto Termico scheme, which, if I just briefly describe the structure of that, it previously allowed about 15 to 20% of the fully installed cost to be paid back within 1 or 2 years. So that's in contrast to the tax incentive, which was, yes, a higher percentage, 65% of the fully installed cost, but that was over a longer time period. So interestingly, we've seen that the Conto Termico has been less successful, even though it gives a shorter sort of, it addresses upfront costs more directly. We've seen the Italian tax credit scheme has actually been more successful in driving uptake and installations.
Cool. And we've got a really interesting question around the value chain. So how much of poor take-up is due to the significant costs added in the value chain? Absolutely. I think this is a fantastic question because we do see a lot of disruptions around different value chains, different business models using new value chains or disrupting the current value chains. And I think it's a really interesting point to raise. So, the cost of heating systems, even gas boilers, are a good bit higher than, say, the list price of the technology, and that's something that the customer has to pay. As we've seen in most of our markets, and as the primary research we carry out and our understanding of customers, is that in most markets, people don't really want to pay as much as they're having to pay for these new systems, and new systems really can't compete with the conventional systems due to cost. So there are many examples actually of new companies coming in and disrupting the value chain. So I guess one example is new product manufacturers, not product manufacturers, but companies offering, for example, heat pumps, not working through the traditional channel of wholesalers, but actually going direct to customers. So there are plenty of examples out there of that we can share with you. But let's move on to another question for now. There's loads of questions here. This is brilliant.
A few people are also asking about the slides, so if you missed the beginning, we'll send the slides through, and if we don't get to your question, because there is a lot of questions here, we'll certainly get back to you by email, so you will receive an answer to all of your questions.
There's a really interesting one at the bottom about what kind of role are utilities playing for these changes come in. I think that's really interesting. I think we're very close to quite a lot of utilities, and as most people can see, there's been huge restructurings of the kind of the bigger utilities. I think there was RWE recently announced they're changing, E.ON have announced they're changing many months ago, as have many of the others. So they really are having to change the way they've traditionally done things and adapt new business models, adapt new ways of get into the customers. They have to understand customers better. So I'd say the roles are completely changing because of the transforming energy markets.
And they're also starting to consider, what role they have to play in the future energy market. So we're seeing a lot of utilities start to consider, whether they want to sell technology direct to customers, whether they want to get involved further down the value chain than perhaps they more traditionally would. Some notable exceptions in the UK, obviously, that are already heavily involved in the value chain. And, they're starting to think about the way that they can provide different services to their customers through connectivity, through digital services, and how far, like I said, they want to go down that value chain. Also, some utilities are considering their role that they could have in providing advice to customers. So can they facilitate these markets to help protect ultimately their electricity sales or gas sales in the future? Should they be pushing certain technologies to make sure that their market is protected? These are all really key questions that we're hearing regularly from utilities.
I think as well, on a wider, higher scale level, there's a lot of consideration with regards to, are we going down electrification routes, or how much is gas going to play a future role in out to 2025, 2050, and discussing those kind of general shifts, yes, in the policy side of things, but also what consumers are asking for, and construction sector as well.
Mm-hmm. So we have another question about another emerging technology, solar PV plus electric storage, so a Tesla type battery. Yeah, we haven't mentioned that. So at the moment, that is something that our energy storage research service looks at, and it's a technology that we're going to be adding to our analysis in the coming months, actually, to run that sort of quantification of how it would work, how much uptake there'd be, what sort of business models they'd have to use to really, penetrate the different markets.
And again, as the question mentioned, the cost of installing the batteries, for example, are likely to change and become much cheaper in the future. And it will be interesting to see whether they're able to follow a path that, for example, solar PV has followed, and such a dramatic change and fall in their price over the last, say, 5 or 10 years.
And just on Tesla and companies like that, we're also seeing these new entrants to the market play with the value chain, play with the way that they go about reaching out to customers. So, for example, there's now a Tesla shop in a very exclusive street in Edinburgh, which is not a car showroom. It's not allowing you to test drive. It's purely selling the concept to customers. And it's quite interesting that they're approaching customers in this way. It's very exclusive. It's creating a lot of buzz about it. Like I said, it's next to Harvey Nichols. It's where all the posh shops are, and they're really actually focusing on, going direct to customers and getting customers to engage with the concept first, before they have to part with their cash. So it's quite an interesting approach, and it's something that we're not seeing from a lot of the traditional players in the market.
It's probably
we have a couple more.
Yeah, maybe so one more question.
But one thing that has come up a couple of times actually is questions about our customer analysis. So how do we incorporate that in a kind of way into our modelling?
Okay, yeah. So yeah, we did talk in the presentation a few times about customer uptake, customer appeal, customer awareness, and that's obviously involved in our modelling. So I'll just briefly describe that. If you want any more details, please feel free to get in touch. So basically, we have a techno-economic model, the Pathways tool, but it's not just any old black box model. It actually incorporates soft factors, or what we call the qualitative factors. That includes customer appeal, customer awareness, installer push, government push, and market push. So we quantify all of these factors, as well as physical fit and customer appeal of economics, to add to our techno-economic analysis to get that sort of output. So I hope that's a very brief overview of our methodology, but if you have any more questions, feel free to get in touch. Should we have one more question maybe? And then we probably really should call it a day.
I guess the other one that's come up is a few people asking about different types of innovation. So what other sorts of innovations are there that we've identified through our energy services research? Is there any patterns to it? It's one of the questions.
Okay, so yeah, the energy service innovation. We really want our energy service innovation product manager here to talk about that one, but we can give you a brief overview. Basically, so we had a top 36, and we apply our own metrics to this to get that top 36. And we've tried to pick the most exciting innovations, but also those that can be most disruptive. And it includes, well, it's global, obviously, and it also includes many different aspects. So not just technology innovations, there's quite a lot on the different business models, and there's a lot around, well, there's some on demand response, storage, and there's some that are like wider energy markets. So it's not just the normal sort of innovations.
Around offering reassurance to customers. There's some examples of really good quality schemes in there that are actually shaking up the market by making the market be able to take off.
Yeah.
Because customers are so reassured.
And more digital innovations as well.
Digital innovations are critical. I mean, we're seeing digital stuff get into everything, and it's going to be really key for understanding the energy market going forward. So it identifies a lot of different themes, a lot of different areas of innovation, and these are quite broad. And the 36, I guess, are examples of almost like the best and show that we see of those sorts of innovations. So we've got a spread across all the different kind of types of innovations, rather than focusing just on, we could have picked out probably 36 examples of storage, but we picked out, the best examples of what we think is an exciting storage proposition.
Yeah, so as well as doing a case study in depth of all the 36, we also tried to pull out general trends and themes, as Jennifer said, and have identified 10 or 11 different areas that we see as key disruptive drivers, and themes that these different innovative models have in common.
Okay, we probably should end it there. We've run over a little bit, but we've spent a bit longer answering all your questions. So I hope we obviously haven't quite got all of your questions, but we will send out a briefing note afterwards, or directly get in contact with you to make sure we answer all your questions. We will be posting this webinar on YouTube, which will be available to the public, and we can send around the slides as well to all of you. So I guess from all of us here, just wanted to say thank you so much for joining us this morning and staying on the line. We hope you found it very interesting, and please do get in touch if you want any more clarification or if you want any more insight on any of the points we've touched on today.
Thank you very much.
Okay, thanks for joining us.